Guys, hope you're all doing well. Making a new trade recap about Monday's price action and talk about continuation. So yeah, let's go. Okay, Monday. On the daily time frame, nothing new. I will not go over the daily to be quick for you guys. So you already know, never reach premium, right? Yes, we tap this unrefined high time frame range. This is the bottom, the distal, right? And we swept external range liquidity. So there are indications that price can go lower, and actually the lower high can be made from here. However, we never reach premium, right? Order flow is bullish. We are making internally here higher highs and higher lows. So, and we reach extreme demand. So this is a daily analysis. You already know. So 4 hours. Okay, so 4 hour I mark swing structure based on the big swings in price. So for me, this is the high and this is the low. I know you guys, majority of you mark different. So I also advise you guys to mark different if you are new, because Pip rules is very mechanical and it's much easier. So focus on that if you're new. If you are more experienced, you can take using big swings in price, because yeah, I think that's the, for me at least, works better. Talking about the 4 hour price action, okay. Here, let me just use this. Okay. At this point in time, after the internal breakout structure, I can expect a pullback, right? So after the, let's say, internal breakout structure, here I expect a pullback to the downside. We have also a change of character on the 4 hour, and even though this is a strong, because here, even though this is a strong internal low, because this low put a new higher high, so internally this is a strong low. So for me this is a strong low, and we reach the discount of the 4 hour internal leg. We have to understand that after the change of character and price, like you can see here, is putting lower lows, lower highs. Order flow is bearish, and this is very important because we know that area we reach, even though it's not a premium, we reach the unrefined high time frame range and we swept external range liquidity. This, after the change of character bearish, this bearish order flow, these ranges can hold until that strong internal low gets taken out. So I will assume this will get respected, right? Until it doesn't. Only when it doesn't, I can assume, okay, maybe, not maybe, supply is not in control anymore. This high failed to take out the low, and now it's time to look for longs, targeting this high. I will never look for sales at this point, because if price reach here, it's very, like, supply clear loss, the battle between supply and demand. Demand is control, internal structure is aligned with the swing structure. Not swing, but you understand this, like internal structure is aligned with internal structure. That makes sense. And for me the high is weak, so yeah. But talk a little bit a step back. So at this point, after the change of character, yes, it makes sense looking for sales because we came from a good area. So this bearish order flow can be respected and can help. So I should look for sales when we reach, of course, 4 hour POI. I can look for sales, but because we coming from a strong internal low, and if you put premium versus discount, we also in the discount, super discount, and we have a very clean, like you see here, a very clean POI, swept liquidity. Sorry, here, swept liquidity. So yeah, swept liquidity, strong internal low, discount, clean equal lows. So I expect a very strong reaction from here. It's just a point of, is this reaction used to mitigate, like you can see here, is this reaction, let me just put here, become clear, to not mess with the drawers here on the left. So is this mitigation enough? The strong reaction is enough to disrupt the supply? What I mean by this step is completely break, or is this strong reaction just use it to mitigate the range and then continue making the lowest lows and low highs to take out the low? Because at this point in time we don't know, right? But what I know is, can I take a long here because we never reach 4-hour POI? Can I take a long with anticipating that the long can actually become a massive trade and take out the high? Yes, I can. So okay, so that was the 4-hour idea. I was happy to take a long, but I was also very aware and looking to take a sell. Just be aware of that. And yeah, 4-hour picture is very, very important. I think I don't have anything more to say, right? So after the change of character, bearish order flow is holding at this point. We have a sweep POI that is at discount, strong internal low. Can this become the new higher high, the new higher low, or is this just a pop-up to continue the bearish order flow? Okay, and this high will only be weak when the supply that is holding price actually fail. So when we break above, the supply is not longer in control, demand is in control now, and we start moving to the upside. Okay, so this is my idea on 4-hour and 15. Okay, this is a little bit tricky, so let's go study this. M15. Okay, when I came to the charts, M15, we have this clean POI here, we have the 4-hour clean POI above, and just looking at this equal highs is just asking to be swept. But let's study price action previously. And also a question that I have a lot is what should I do when I come to the charts in the morning or in the afternoon? And I just advise you to study previous price action, study like yesterday price action, study Asia session if you trade London like me, because it helps you build a story, right? So let's start here. We reached the 4-hour POI, we already know, right? With this equal, so I'm expecting a very strong reaction from here. We have a change of character at this point in time on M15, and all this supply, right? All this supply range gets completely smashed. So demand took over supply at this point in time. Demand is taking over. Is this demand taking over to put a new higher low from here? We never know. First and foremost, we assume that the order flow will get respected until it doesn't. So demand is taking over. First and foremost, to put the price to the upside, mitigate for our supply, then push to the downside. That was my idea. Okay, so after the supply getting completely smashed, price came back, demand held, and put a new higher high. So at this point in time, I have this strong internal M15 low. I say internal because we know, and I've used big ranges. For me, that was the M15 high and M15 swing low. So for me, this is just an internal strong low. So okay, after the demand hold and strong internal low because it put a new higher high, price moved to the upside here. Let me just use this. Move to the upside, right? And then start moving to the downside. At this point in time is key what happened because at this point in time we have a change of character, and more important for me, this supply, because this change of character can be used just as inducement to reach here and pop to the downside. After this supply gets run, for me is a very clean indication that this side is weak, because the order flow shift bullish, and yeah, for me this is a very indication that this high is weak. So when I come back to London, I already know that this is a strong low internally, of course, and this is a weak high. And I go a step further, I see this very clean flip, right? Price pop up, push down, push back up again, failed reaction, and this is a very clean flip. At this point in time, with this weak high, this is not a strong low yet because it never put a new higher high, but what will make this low becomes weak to look for sells, because I want to trade from strong legs, right, or into weak legs. And what will make this low weak? In my opinion, you have to have a change of character, or even better, the significant demand range gets taken out. But in this situation, we don't even have a bearish shock, right? Nothing here. If you look for the count the weeks, right, we never have a bearish shock. So at this point in time, you have the strong low, the weak high, and this low is will probably be strong as well, because to be weak, this demand needs to get taken out, and we didn't even have a change of character as well, bearish. So for me, at this point in time, I'm just looking for longs. We also have a bunch of equal highs here. This type of liquidity just asking to be swept. For me, like when I see this, I don't want to take sells, in my opinion, if I something above like this. Something you also want to consider, you maybe want to consider, is how the highs and lows are formed. I already collect a lot of data in this topic, and it's super important for me. Not talking about structure, just talking about price action. So if you have a push up and the high is from like this, or a push up and the low is formed like this, this high in terms of price action is, in my opinion, weak, and this high in terms of price action is protected. So when price pop up, is much more likely to put a new lower high than this price. This price likely to get run, right? Test yourself, make your own rules, but yeah, something I notice a lot. So what we have here, not only we have this bunch of equal highs, and this is weak as well. We never trade below we never violate the demand range, so we don't have indication this is weak, right? So I don't want to take sells at this point in time. We also have a sweep of liquidity, so I have a sweep of liquidity, and if I'm looking for sells, what I don't have anything. You can argue that you have this little sweep, but these equal highs for me are screaming. So for me, we have a protected low in terms of how price action is formed. Like I said before, when we have a protected low, something like this, against, in my opinion, a weak high. So it's basically what is happening here. So for me, I much prefer to take a long from this sweep low to take a sell from the equal highs. So that's another indication for me to look for longs. Again, also something that I collect a lot of data, and maybe you also want to consider, even though you can look for sells at this point in time, sometimes you want to take pullbacks. That can be in your analysis, a pullback or a small counter trend trade when we have large liquidity pools. So when we have large equal highs, large equal lows, large trend line liquidity, when the highs is from like this, right? Taking pullbacks, a lot of the times, they actually follow through. So that's also something you want to take in mind. So after the sweep of external range liquidity, I was expecting a pullback. So you know that, for example, after the chop, we have a pullback, right? After the internal break of structure, you have a pullback. So I was expecting, after this internal break of structure or chop, whatever, a pullback. Knowing all the idea behind this pullback, for me, can be the final catalyst to put price to the upside. So I won't get involved in this internal pullback, because I know this internal pullback can be enough to push price higher, especially with these equal highs. And if I want to take a sell from here, I want to, I can take a confirmation entry, but I want to be in this buy, because with these highs, this can easily follow through. So I personally use, a lot of you guys, you have something like this, right? And price never reach. I actually took a loss today because this method that I use, it balances itself during the year, right? In this situation, it resembles wind form, two winds, but a lot of the times by using this method, and the method is buy to sell, sell to buy, that gets engulfed. Sometimes we get a little bit bigger range, and the bigger range we get, it means we have more opportunities, and sometimes this can be just a pullback, right, to actually mitigate something here on the true last engulfed candle. So yeah, I'm just transparent to you guys. I use a little bit different supply and demand, and like Matt say all the times, find what works for you and stick with it. We don't need to be a copycat, right, from myself, Matt or David. Just find what works for you and go from there. Okay, so at this point in time, I'm expecting a pullback after the internal break of structure, right? And I have room to be risk-free until price reach this supply. At least I'm risk-free if price pop to the upside. In case price follow through, perfect. Okay, so I go to the 1 minute, and still early. Let me go 7 a.m. Okay, 7 a.m. What we have here, again, what price form sweep of liquidity. So again, we have a sweep low, something like this. For me, is indication that a lot of bullish momentum coming in, a lot of bullish pressure. I prefer to trade with them than taking trades against them when we have a protected low like this in terms of price action. The supply, right, that was holding price on the M1 because price broke down, right, at this point, pop up here, we have the flip at this point, so the supply gets completely smashed. So demand now completely in control. I have a M1 demand in control, so this can be a very good indication, especially after the break of this swing point, this external range liquidity, the sweep of external range liquidity. M1 demand took over supply, so I can expect a pullback to the M15 POI. So if I can take a buy from here and be risk-free, it will be super good, because this can easily follow through with all the idea behind and this equal highs. So I was just looking to take trades on M1 continuation. So okay, what we have here, we know that we have the first flip right here, but just to clean things up a little bit, we have the price at this point in time. We have this. Sometimes I use the entire range, right? But to justify flips. So in this situation, I put here, and I use, for example, let me put this candle. I can justify this being a flip. I can put the entire range, but it becomes much cleaner like this. So actually, I have a nice interaction here as well to justify, but yeah. We also have sweep of liquidity, right? Here, sweep of liquidity, and we have something like this. Okay, so demand is in control. I'm playing the pullback to the upside. I can be risk-free here. Perfect. So when price, let's continue. Before I also want to show you to tell you how I take continuations, because I already told you in the previous video, but just to reinforce the idea, I just wait for a flip comes through sweep of liquidity, right? I like the failed reaction happening. I use weak breaks. So after I seen the supply getting taken out and the sweep of liquidity, for me this is a well-formed range, so I'm able to just follow them, and basically taking every sweep range that's a flip and is well-formed, and yeah, basically that. So at this point in time, I'm not going to the seconds, right? But because you can literally have M1 entries here, so I'll just stick to them one at this point. 2 pips is more than enough, right? I'll put 10R because I use a fixed 10R at this point, and just leave a little bit running in the end. So let's continue. Okay, so risk free at this point in time. Let's continue. At this point in time, we have moved to the upside, price move down, mitigate the range, and move up again. So this range here is already mitigated. I'm not expecting this range to, I'm not expecting price to come back here again, because if you read the order flow, what is happening, price is pulling back to the upside, right? And we have a push down. We mitigate this range, right? Well, let's start here. Okay, so we have a push up, we have a push down, we have a push up, right? Price pops to the downside, mitigates this range to the left, push up, push down, mitigates this range to the left, push up, push down, mitigates the range again, push up. So all these ranges were mitigated. It doesn't make sense for me waiting for this to get mitigated and be waiting for even this to be mitigated at this point in time. If price moves back down, I will be waiting for a realignment again, because order flow shift bearish at this point in time, and maybe the pullback, price mitigates something here, and maybe the pullback will start. So if I take price comes back here, if I took long, I need some M1 realignment again, showing demands took oversupply again. So yeah, all ranges are mitigated. It's just following the ranges, and yeah, at this point in time, we also have a flip range, which means I'm interested to taking a continuation. So you put the supply range, you look left to see what price is reacting, but I can justify the reaction by this entire range. So I will just put something like this, but you understand that it is the entire range, just to be a little bit more clean. After the failed reaction, I'm not drawing, but I need to wait for the failed reaction to happen, and because it's a sweep range, I'm happy to take it a buy following the ranges. Everything else is mitigated at this point in time. Yeah, 2 pips if you are using one minute is more than enough in this situation. Covering the low, right? You can cover the low, and okay, get tag in. And you possibly, I don't know how you manage. I personally managed to break even when the pullback that led to my entry gets taken out, so I'm about to break even at this point. And something nice is that we have equal highs to target. So because we have equal highs here as well, this can be used as inducement to reach the extreme. So I'm happy to take a buy from here. At this point, we reach an area that, okay, we know that price went to the upside, but if you want to take a sell from here, I personally will wait for M1 confirmation entry minimum, because all the things I said before, and for me it's not very high probability, because you are trading from a weak leg, right? This is weak, this is strong, and this probably is strong. It's only weak if this range gets taken out, and at this point it doesn't seem it will. So you are taking a trade from a weak leg in this point. Remember that. M1. Okay, so following the ranges, I personally stopped taking M1 continuations at this point, because we are reaching this extreme, and even though it's a weak leg, extremes can make deep pullbacks. So if I, for example, take a long here, a lot of the times can make messy price action in the extreme. So I just avoid them. And actually, if you look closely, all these ranges never form through sweep of liquidity, so I personally don't take them. For continuations, you already know this, it needs to be a sweep range, so this is not a sweep range, so for me, no continuations. And yet, if you are looking for sell, there was a super aggressive here with the change of character, but where is the V shape? Where is the V shape reaction? We can see the V shape here. We want to see something like clean candles. We don't need to be like this, but like you see here, true sweep, a clean move to the upside, a clean move to the upside, a clean move to the upside. Like this is a little bit forcing, knowing that's low probability overall. So not even looking for sells, to be honest. And yeah, this was a sweep range. I didn't took it, but if you notice, price swap liquidity, pop to the upside, mitigate the entire range, never reach the refined candle, but the logic still there. So we have the move up, right? Then down, bottom, down. Sweep liquidity, pop up, mitigate the distal of the range, and move to the upside, right? So yeah, that's the reason. Okay, sorry. And if you use 2 pip stop loss, if you use M1, you start the week with nice 20R. Nothing, not bad, right? And yeah, that was the trace, that was continuations, and hopefully can help you a little bit more. I know it's a little bit aggressive for a few of you, but yeah, just my style and works for me. Just find what works for you. You don't need to implement everything that I said in this video. Just if you take one little thing into consideration and test it, see by yourself, build case studies, do it on daily markups, and build your strategy from there. So yeah, hope it was helpful. See you guys soon.